Ji Bismillahirrahmanirrahim. I hope you are all doing fine. And after many days, I have started this series again. This video will be included in the series of business finance subject. So you can go to that series and you can watch all the videos on the subject of business finance. Okay, today my topic is financial statement, and from the many there are multiple financial statements. For example, income statement, balance sheet, cash flow statement. I will be discussing about the statement of profit and loss, or we also call it as income statement. But before going to the income statement, before going to the topic, I will cover a short difference on the basis between book value and market value, and this difference will be based on international accounting standards. Okay, market value versus book value, we will read and we will discuss about its differences. However, let's first discuss about international accounting standards. What are international accounting standards? These are, it is saying, I will keep on reading from the book and then I will explain it in my own words. So in this way, in this manner, things will be easy for you to understand, because I will be reading from the book also. Then when you will pause the slide and read the line from the book, and then you will listen my explanation, things will be easy for you to digest and understand. Okay, what are international accounting standards? The common set of standards and procedures by which audited financial statements are prepared in Europe and in many other countries. For example, we are talking about Pakistan. So in many other countries where the financial statements are prepared according to a certain rule. For example, we say assets are always equal to liability plus owner's equity. So we write assets on the left side and we write liabilities, and the capital are liabilities and the owner equity on the right side. So why do we keep those sides? Because of accounting standards. So there are certain formats for income statement, for balance sheet. So those formats are actually devised by IAS, or International Accounting Standards. The values shown in the statement of financial position for the firm's assets are book values. So the values which are shown on the book, these are the book values. The values shown in the statement of financial position, either its income statement or its balance sheet or its cash flow statement. So the firm's assets are book values, and generally, not normally, what the assets are actually worth. Actually, the book value means book value shows the actual value or the actual worth of the assets. Henceforth, whenever we speak of the value of the asset or the value of the firm, we shall normally mean its market value. And in the normal way, in the normal scenario, when we talk about the value of the firm, we are actually talking about the market value. What is the market value of the firm? For example, when we say the goal of financial manager is to increase the value of the equity, we mean the market value of equity. For example, we are saying, what are the goals of financial manager? A financial manager needs to increase the equity, and equity, its value will be in the market value of the equity should be increased. Now there is a small difference between book value and the market value, and after that we will jump to the income statement. So book value, accounting figures drawn from the accounting standards. The figures are as it is drawn, as it is, these are shown by the book value. Therefore balance sheet will not always show the market valuation, because market valuations are not being shown in the book value. Book value actually gives the actual value of the asset or the worth of the asset, and it can be different from the market value. We need to keep this point in mind. And then value based, market value says value based on the prices or the market valuation. What are the prices, what are the values in the market? Those are actually considered the market value. Market is needed to be considered. Then value of a company is equal to the share price multiplied by total number of shares. For example, I'm saying, what is the value of your company? Your company is issuing 100 shares and at the price of 10 per share. So 100 into 10, 1000 will be the value of the company in the market. So this is a small difference you need to keep in the mind. And then we will study about income statement. The second name for income statement is also called statement of profit and loss, or the consolidated income. The Why it is called statement of profit and loss? Because at the end of financial statement, for example, here we see whether we are having the profit or we are having the loss. So this is also, that's why this is also called statement of profit and loss. I will make another video for the statement of profit and loss. I will stop my video here. And before stopping my video, I would like to request you, you should subscribe my channel, especially if you are a student of business administration. This channel will be very helpful for you. So you can subscribe my channel. Thank you. So this is the reason why we'll call it as a statement of profit and loss. Okay, let me introduce you about statement of profit and loss. Then I will make the next video, which will be I will completely debate on the statement of profit and loss. Income statement or statement of profit and loss, financial statement summarizing a firm's performance over a period of time. Basically, this statement shows the performance of your firm over a particular period of time. That can be 6 months, that can be 1 year, or that can be more. So actually, it summarizes the financial performance of a firm. The income statement measures the performance over some period of time, usually a quarter. 6 quarter means 4 months, 6 months or a year. And the income statement, its equation is net income is equal to revenue minus expenses. As this figure is also showing you, when we minus the revenue, when we minus the expenses from the revenues, then we get our net profit for the year. I will demonstrate a income statement here also for you. Net income, as I told you, what is the net income? When we subtract, when we minus, when we deduct all the expenses from our revenues. Revenue, what is revenue? For example, you are selling a product. When you sell the product, you earn something. And what you are earning is actually your revenue. That is also called your income. Okay. So if you think of statement of financial position as a snapshot, then you can think of the income statement as a video recording covering the period between before and after the pictures. For like it's saying, income statement, what is your recording before and after that picture simply means that you have actually minus subtracted all your expenses from your revenues, and you are getting a clear picture of profit. I will stop my video here. And as I told you, you can subscribe to my channel so that these videos will be readily available to you. And you can watch those videos when you are free and before your exams. Inshallah, in the next video, I will completely debate on the income statement. Thank you very much.